Let's hit the chips now because they're climbing as Barclays gets bullish. Another good day for the chips, highlighting stocks with data center, PC, and handset exposure as the largest potential winners. The firm upgrades AMD, Qualcomm, and Seagate to overweight from equal weight and ups its price target on NVIDIA. All winners today. NVIDIA's at the top of the NASDAQ 100. Meantime, look at Western Digital. It's rallying on reports it is in advanced talks to merge with Japan's Kioxia. A combined company would rival the likes of Samsung. Matt Bryson of Wedbush joins us. He's got a buy rating and a $60 price target on Western Digital. Does this move make sense to you, Matt?
It makes a ton of sense to me, Sarah. So with the deal, as at least as Bloomberg explained it, not only do you potentially have consolidation in memory space, which is a great thing for WD as well as all the other memory stocks, but you have the potential to split out the hard drive business, where I think the value of the NAND asset has been hidden within the combined company. By spinning the flash business off, you effectively unlock that value.
You also have a lot of buys on these stocks, AMD, Micron. I think you're on hold on NVIDIA, but do you agree with the call today from Barclays, which is really lighting a fire under some of these stocks?
Yeah, I guess my concern is I think there's still at least one more cut to numbers in terms of Q1. With Barclays, I think what they're saying is that the market should look beyond that cut. I'm a little bit more concerned in that we haven't seen the pickup in demand, for instance, from the Chinese consumer, from the U.S. consumer. With data centers, we're still waiting to figure out what budgets are going to look like for this year. So maybe I'm a little bit behind Barclays in thinking about a recovery. Having said that, you look at names like AMD, I think they're a share gainer in the server space. You look at something like NVIDIA, certainly if you believe in AI, they are the market leader in AI. There's really not anyone else in the space yet. And at some point, these stocks will recover.
Mike Santoli, the bullishness around NVIDIA. Jim Breyer, well-known tech investor, it was his favorite stock. He loves it. He's buying it up on the weakness. I guess my question, Mike, is how cheap these stocks actually got, maybe relative to other cyclical downturns or other periods in history like this, and whether it was cheap enough.
Yeah, it didn't seem, they didn't get cheap and stay cheap. They kind of had a lot of the frost skimmed off them. I think they did retrench to a fair degree. I think the ones that looked cheap were the ones that kept actually having the estimates go down a lot, like the memory side of things. I think what's instructive is if you look at a longer-term chart of the semiconductor ETF, the SOX, it's pulled back to a level, even at the lows, where it had first reached on the upside in, post-pandemic. In other words, it never really unwound the pandemic surge. Maybe that's because the secular forces are so strong and, we're just in such a digital economy that this is just the new normal on a pullback. So I would say that they got, some of the risk taken out of them, but they didn't become no-brainers on the cheap side.
Matt, you agree with that? And what's your favorite name?
So I agree in the sense that when you look at the memory names, I disagree in the sense that when you look at the memory names, I think at points you could look at Micron and it was trading at close to book, and historically that's proven a pretty good low. Certainly with something like NVIDIA, it never really got that far below 30 times, 25 times earnings, which is well above historical semiconductor multiples. To pick a favorite, Sarah, at this point I'm going to go with Taiwan Semi. If you believe that there's a pickup, certainly they're a beneficiary, and they are going to be a share gainer through this year, continuing to benefit from the Intel struggle.